All right, this is the weekly coffee video for the week of Monday, September 30th. We're still in the very similar structure. Things are narrowing here. We've got the 93.70 lows, the support weekly containment area if tested, and resistance has dropped from the 104 to the 103 handle this week at 103.25, can contain weekly buying pressures. As I alluded to in last week's video, I said there is this scenario where we could actually trade inside this wedge for over the coming weeks. And we really don't have a strong directional move over the 3 to 5 week time horizon and beyond unless we close outside of this area. So if we closed above 103.25, then the 110 even to 114.15 region becomes a 3 to 5 week target. I'll show you that right now. Where is this? Here we are. Okay, so I have a little bit at 101.85, just so you know, and that's here as a minor point. These charts are different. Some are weekly continuation. Some are December data only. That 104.85, sorry, 103.25 is a December chart, and so I'm using that as the primary ceiling. But if we closed above this 103.25 level, we would obviously then also close above 101.85, which would essentially be a double buy signal, if you will. And that should yield this 114.15 formation within 3 to 5 weeks, where the market can top out through the balance of the year, possibly into next spring. And let's take a look at, you got a little bit at 110, some meaningful resistance area in the continuation chart. So that is really the start of that range of resistance that I would expect within 3 to 5 weeks of closing above 103.25. And not really until we were to close on a weekly basis above 104.15 does this market look significantly bullish, into next year. This is that 114.15 level, not marked. So then closing above it, you've got a couple of months where you get into the 128 handle, but ultimately we could, after closing above 114.15, by later 2020, reach into the 150s. That's just kind of a big picture right there. Let's take a look at the downside. I've got 97.85 as a level that can contain session weakness. If we closed below it on a daily basis, the 93.70 expected again within several days, where we can once again place a weekly low. However, it should be mentioned, I'm not a big fan of triple bottoms. That would be a triple bottom conceivably. So be careful buying 93.70. I think it's good for a day, 2 or 3, maybe even a week. But if we close below it, don't be surprised. And if so, that would set off secondary selling into later October. And there I have, let me show you I've got 87.35 initially, but really I'd look for this area. 82 even would be the target within 3 to 5 weeks, and that can absorb selling through winter trade. I've also got, this is actually not marked. I have to update that. That's 81.90. So that 81.90 to 82 even would be our 3 to 5 week target. This is a significant support region that is much more significant than 93.70, and if tested, say, by the end of October, could contain selling not only through the balance of the year, but quite possibly into next spring. I believe that's all I've got to say. We've got a two-sided framework between 93.70 and 103.25, and if we close outside that region this week, expect 114.15 to the upside if we close above 103.25. If we close below 93.70, expect that 82 area within 3 to 5 weeks. And that's all that needs to be said for this week's December coffee video.